We have already seen the year of the rabbit being pretty good for risk assets. So what will be driving the gains in 2024?
Yeah, no, the dragons are good at making money, apparently. So the zodiac might help us in a little bit in our favor. But it's basically what you guys were just talking about. We've seen that the global macro that has been so difficult for Asian equities over the last 2 years is starting to move in favor of Asian equities. That means lower bond yields. That means, for example, a slightly weaker dollar and these sort of things. That's good for Asian equities. You can actually think about it that it's not as attractive to put your money in the US anymore. You want to go somewhere else. And if you then look at across the region, the outlook for Asian earnings growth is not too bad. It's maybe not as spectacular in some of the markets as it was in this calendar year as we go into 2024, but it's still not bad. You get something around 15% or so in most markets. So that's good.
How much of this will be helped also by Chinese growth?
Yeah, so I think in most markets, we look at it in a kind of a traditional way, but China is going to be a bit different. Either, I think, in China, you get a scenario whereby sentiment remains poor, the earnings are going to disappoint. The earnings for this and next year are probably going to hover around something like 15%, maybe next year, something like 12% or so. But let's assume that next year that comes down. People are not really positive. We could go back to the lows that we've seen in late 2022. That gives you 15% downside. On the other hand, earnings, if they do hold up, and actually this year they've held up reasonably well so far in China. We're hovering actually at about 18% at the moment. And we see the valuations for Chinese equities or sentiment going back to some kind of average that we've seen in the last 5 years. You can actually see easily 40% upside. So you either have some downside or some substantial upside in Chinese markets. Net, we think that probably means that we got to assume that we could maybe make up to 20% in Chinese equities into 2024.
Harold, which sectors then would you be looking at, particularly as you see really across the board valuations looking very compelling?
Yeah, that's right. So across the whole region, it depends a bit sector-wise where you want to go
for China. I should specify for China.
For China. Yeah, okay, in China, right? So I think one of the interesting trends in China is the rise of what we call empty nesters in China, people in their 40s where consumption patterns are changing. So I think parts of the consumer sector look really good. There's, of course, some sectors that are strategically important to China. I think about certain parts of the renewables, so some of the component makers in that would be interesting. But a sector that I think really looks maybe interesting because it's very much geared and sensitive to those lower bond yields are the internet names. We've seen them responding quite strongly to the decline in bond yields from say 5 to what is it now 4.4ish or something like that. If that were to continue over the course of the next say 12, 18 months or so, that these bond yields gradually grind lower, that would be good for that particular sector. So that's what the sector I would be really looking at.
What do you see as the biggest risks then going into next year to this outlook?
The risk is that China is going through this transition in its growth model, right? From the infrastructure towards the high-end tech. Now, the infrastructure is a big chunk of the economy. The high-end tech is a small chunk of the economy. So it can't really drive that forward. So growth could continue to soften across China. We're talking about economic growth here, with all sorts of other unintended consequences in terms of unemployment and maybe sentiment and these sort of things. And maybe, therefore, the consumption numbers don't really come through in China. So that's a key risk, that the growth is going to be weaker than anticipated. The other risk is, of course, that we've talked about this before, that, hey, bond yields are maybe peaking, they're starting to come down. I think we had it over the summer. And suddenly we have indications that actually inflation is rather sticky in the US. It doesn't come down as quickly as anticipated, and that therefore the rate cuts by the Fed is going to be much slower than what the market is pricing in. And then you get a bit of a reversal of the trade that we've seen over the last 2 or 3 weeks or so. That would not be good. So then the global macro doesn't work in favor of Asian equities or Chinese equities, but works a little bit against it again, as we've seen over the last 2 years or so. So that's another risk.
Harold, could we see a reversal in the Japan trade that has been one of the biggest calls of 2023? A lot of optimism, whether it's corporate governance, a weaker Japanese yen, but given the uncertainty about what happens with the BOJ next year, where do you stand on Japanese equities?
Yeah, I mean, you could see if, for example, rates go up in Japan, that maybe yen will strengthen a little bit from there. There's another interesting dynamic in the Japanese market in so-called NISA funds. So there's tax benefits that were temporary for Japanese savers to put money into Japanese stocks. Those benefits will become permanent from the 1st of January onwards. So that might give an incentive for people to put more money into Japanese equities. So that would be positive to Japanese equities. But if you look, for example, at how it trades really with bond yields, it's almost the opposite of China. Lower bond yields is not so good for US bond yields, not so good for Japanese equities. And also, most funds are really, really well positioned in Japan already and not in China. So what we could see maybe potentially in 2024 is some sense of money flowing back from Japan into China. That will be an interesting sort of trade and dynamic to watch.